So I'm Bright. I'm the one holding the class for today, guys. I'm very, very happy to hold this class with everyone here. So as far as we are children of God, there's nothing to hide. So let me also teach my knowledge of the forex market so that I can also use and improve your trading analysis when you come to your financial markets. So guys, let's go. Let's go. I'm sharing my screen now. I'm going to share my screen now. So I'm going to share my screen now. I'm going to share my screen now. Okay. I'm going to share my screen now. Okay, can you guys see my screen?
Yeah, we can see it.
Okay, that's good. So this is VIS201X. So guys, yeah, this market, forex market is more of analysis. It's more of analysis, it's more of structure. So when you come to the forex market, there are I call it 5 formulas. What I follow, the principle of analyzing the financial market when it comes to forex trading. For me also, from weekly, daily, and H4 are higher time frame. 1 hour is a lower time frame, whether you like it or not. 1 hour is a lower time frame. 30 minutes, 15 minutes, down to 1 minute, they are lower time frame. So the higher time frame are from 4 hours, daily, and weekly. So when you come to the financial market, the first thing you want to do is to check the weekly structure. From the weekly, you enter to daily. From the daily, you enter to H4. Then what the H4 is doing, you use it to determine whether you are going to sell or buy when it comes to H1, 30 minutes and 15 minutes. So you start from H1, start from weekly, from weekly to daily, from daily, then you now enter H4. From H4, if what you are looking for, if first, for example, we talk about structure, daily, for example, let's say daily, weekly is selling, daily is selling, then H4 is also selling. So for you to take a trade, you have to go to your H1 and look for your principle of trading, your formula. You see, first thing in me, one thing I always do when it comes to the financial market, first of all, look at the structure of the market. That's the first thing you must do first. You look at the structure of the market. And the structure of the market. That's the first thing you do first. The structure of the market. That's the first thing. So we are going to look at the structure of this market. For us to determine and for us to know what the market is doing, you have to know the structure first. And you don't use your eye to gauge structure. Now, many of us use our eye to gauge. So this market is selling. As far as this market is in a downtrend like this, many of us can say it's selling, which is good, but you have to do the analysis. The analysis of the market is where the market is. Now, many of us, we can't do analysis. We can use our eye and just gauge it and say that this market is selling. So no need for me to analyze. Let me just wait for my point. No, you have to do analysis to know the direction of the market. So the first thing, the structure of the market. The second thing we are looking at after structure is liquidity. You gotta look for liquidity. We have to look for liquidity. Then after liquidity, the next thing we want to look out for is our break of structure, which is BMS, or break of structure, or BOS. Break of structure.
Well, I'm done. Okay. I'm done. I'm through there. Yes.
Please mute yourself. Talk about break of structure, which is BMS. Then from the BMS, we want to talk about order block, which is our order block. These are how it is arranged in the market. These are principles we follow to trade smart money concept. Then from there, we talked about the fib. The fib comes the last. The fib is the last. So these are the formulas we use to analyze the financial market. starting from the structure of the market. So we are going to today, we are going to start from the structure of this market. Let us first look at the structure of the market. Then from the structure of the market, we now look at liquidity. So let's start, guys. This is daily. We are starting from daily because if we go to weekly, you see the weekly of this market is just bearish. So weekly is selling. Weekly is in a downtrend. Weekly is bearish. So let's go to daily. So move over to daily. This is daily. So we begin to analyze the daily structure of this market. We start from here, from this side, or we start from here. So what the market was doing. So let's start from here. Here is, we start by here. Here is, okay, this market was coming down from the upside. Here, let's say this is our lower high. This place here is our lower high. Okay, so that we know where the market break structure is our lower high. Now from this lower high, the market make a lower low here. You see, there was a break of structure here. The market break structure here. So you made a lower low here. There was a break, a BMS here. So because of this BMS, we have a lower low here. We have a lower low here. So from this lower low, so the market went up and break the structure to the upside, a change of direction, change of trend. So there was also a BMS here too, to the upside. So there was a break of structure here. There's a break of structure here. So the market now from this lower low, they break our lower high, break of structure. So after this break of structure, which is our higher high, here become our high. So the market break structure here. So we have a BMS here to the upside. So we have a BMS here to the upside. So from this BMS, the market retrace back and give us a higher low from this other block here. So we now have a higher low. We now have a higher high. So we have a higher low here. We have a higher low here. And we also have a higher high here. Look at it. Break of structure here. We have a higher high here. This is a higher high. This place is a break of structure here. After the break of this candle that break this structure here, this candle that break this structure. So we have a higher high here. So we have a higher high here. A higher high from this place. There's a higher high here. Now, after the higher high, people waiting in the group. From here, we have a higher low here. This is a higher low. This is a higher high. This is a higher low. After the break of that structure, we have a higher high and a higher low there. So we are analyzing the market, checking the structure of the market. From this higher low, we have a higher high again. From here, there's a higher high here. So this is a higher high. The higher high. So we have a higher high here. See, we are analyzing the market to know the structure of the market. So we have a higher high. From this higher high, the market came down and broke structure here. See, they break this higher low here. This is a higher low. So this higher low was broken here. This higher low was broken. There's a BMS here. It's a break of structure here. So this higher low was broken. This higher low was broken. So now there's a BMS here. We're analyzing the market. So this is a BMS here, break of structure here. So the market break structure here. From this break of structure, the market now give us a lower low here. Give us a lower low and a lower high here. The downtrend has started. Give us a lower low and a lower high here. Lower low and a lower high. So let's label it before we determine what the market wants to do. So give us a lower high, which also regard our external liquidity. So a lower high and a lower low here. You see, so we are checking. So a lower high and a lower low here. From this lower high, from this lower low, the market break structure give us another lower low here and give us another lower high here. Give us another lower high here. So we have a lower high here, lower high,
This is
a
a
lower low.
glass for everyone.
Dismiss yourself.
It's
In a lower low. So we're in a downtrend and a lower low.
not the four. It's not the four.
And a lower low. A lower high and a lower low. From this lower high, we have a lower low again. The market give us a lower low here and also a lower high here. Now we are checking the market, marking out our lower high and our lower low. So this is a lower low. Now it's a lower low. From this lower low, the market give us a lower high. Okay, lower high. Now from this lower high, the market went down and give us a lower low. This is how the market has been moving since. Give us a lower low here. From this lower low, it gave us a lower high here. Okay, analyzing the market, trying to know the structure of the market. Gently, once you do it once, you don't clean your chart, you leave it there. You begin to check the market and make it to use and determine the movement and the direction of the market. So we have a lower low here. So from this lower low, the market went down and give us what? A lower low here. There is a lower low here in this place. The market gave us a lower low here. There's a lower low here. This place. From this lower low, the market give us a lower high here. Now, the lower high here. We are just marking, trying to know the structure of the markets. That is the first thing we do. So the lower high here, lower high and a lower low here. Look at it. Give us a lower low here. Now from this lower low, the market also went down and gave us another lower low here in this place. There's a lower low here. There's also a lower high here. You see, it's a lower low there. There's a lower high there. So give us a lower low and a lower high here. So this is a lower high. So we are analyzing the market. So from this lower low, the market went down and gave us a lower low here in this place. It's a lower low here. Now from this lower low, the market gave us a lower high here. So this is a daily structure. As you can see now, we are through with the daily structure. So we are still on daily structure before we go to 4 hours. So this is the daily structure of this market. This is a daily structure of this market. So we have gotten a lower low here. And also a lower high here. So we have gotten the structure of the market now from daily. Now the next thing we want to look out for is our liquidity. We call it, there you look out for liquidity graph. This is a daily structure. You said? Please mute yourself. So this is this is the 4H. So we come to 4H. This is our 4H. So the next thing we want to look out from after analyzing the market, we want to look out for liquidity. Where liquidity are hidden in this market. Liquidity are your equal highs and your equal lows. So you begin to search for liquidity. We have liquidity graph. We have equal highs and equal low. For example, when this market started from here, this lower high and this lower low, this one is eternal range. This one I call eternal range liquidity. So this eternal range liquidity was here. So after the market break structure here, look at it. As a trader, you need to know what the market is doing. You see, the market created an equal high here. Look at it. Here's an equal high here. Now, this equal high they created here, you search for liquidity. Understanding the direction of the market. Look at it. There was an equal high here. This is the liquidity that was created here. So if you don't trade your eye, you will not know that this place here is a liquidity when it comes to H4. So this liquidity was created to this other block here. Look at it. So you search for liquidity. This is a liquidity here. So this liquidity at your equal high. So it was created to the other block. So it was created to this other block here. Look at it. This liquidity. So the market came here after the break of this structure, because there was a break of structure here. Look at it. The market broke structure here. The break structure here. There was a break of structure here. So it is not this candle that broke the structure. It is this candle, this red candle that broke the structure. This red candle. It's not this one. It's this one that broke the structure. So after the market broke this structure and gave us a lower low, they formed what we call liquidity here. So after this liquidity was formed, the market came back and tapped to this other block here. The other block is the last buy to sell candle in the market, so which you must also train your eye to know. Look at it, they came and tapped into it. That liquidity that was created there, they tapped into the last buy to sell candle and what? And move down. Now, when they move down, the market is still what? Is still bearish. So after they form this lower high and this lower low, so we want to look for our trade in this between this lower high and this lower low here. You see, there was no liquidity that was formed here. Liquidity was not formed in this range here. So no liquidity here. There was no liquidity here that was formed here. So if there's no liquidity that was formed, we look for the last other block. We look for other block, either this one or this to sell the market. If you go to smaller time frame, you will know why the market use this place to sell. So the market use the previous, yes. So guys, so the market use this lower high here because there's no liquidity that was formed. This is something you must know. Because liquidity was not formed, what happened? They used the lower low as a retracement to the downside. So when there is no liquidity, it's something that you must know. Please mute yourself. Everyone mute yourself.
Please, let's all mute that.
Yes. If there is no liquidity, let's say this is a lower low. Let's say this is a lower high here. This is a lower low. Now, between this place, in between here, by right, if the market want to come back to this lower high, once they come here, they will create a liquidity to this lower high and went down. But in this case, liquidity was not created yet. So the market used the lower low as a retracement to go back. As a retracement to go back. It's something you must know in this market. So if there's no liquidity, use the lower low as a retracement. So because there was no liquidity that was formed in this place, so the market used this lower high as a retracement to go down. That was the first one. If you also check this leg here, this between this lower low and this lower high, there was no liquidity that was created. This one was created here. This one was pure, but there was no liquidity here. Because there was no liquidity here and the market was in a bearish trend, what happened? The market used the lower high as a retracement zone. This was the lower high. Look at it. Now, they use this lower high as what? As a retracement. This lower low, sorry. They use this lower low as a retracement to go down. So they use this lower low as a retracement. Now, from this lower low, they created liquidity in this lower high here. So this lower high is a liquidity. This lower high here is a liquidity that was created. So we have, first of all, liquidity has been created. This liquidity they created at this lower high here is to this other block. First of all, is to this other block here. So this liquidity that was created is to this other block. So we have a sell opportunity in this place here. So we have a sell here. Anytime the market come here,
He's not the main tailor, the apprentice.
So guys, so the market form this liquidity that is created in this low high, anything that is called equal high or equal low in the market, avoid it, avoid it, avoid it. So the market creates a liquidity to this other block here. This lower high is to this other block. So they are going to use this other block as a retracement. So we have a sell here. Now, look at it. The same thing happened here again. If you check this leg here, this leg, this between this lower high and this lower low, there is no liquidity that was created around this place here. So if the market want to retrace, the market will retrace at this lower low here. Look at it. The market also retrace using the lower low here. This is a secret I'm just giving to you. That's what the market always does. So the market use this lower low here. Now they use this lower low as a retracement to come down. Now from this lower high here, this is a lower high. From this lower high to this lower low, the market came down and what? And break this lower high here. This lower high was broken. So this is what we call it was a liquidity grab here. There was a liquidity grab here. The market grabbed liquidity here and break structure again. So this is what we call liquidity grab here. So there was a liquidity grab here. I'm trying to use this thing here. Thank you. Yeah, stay now. So there was a liquidity grab here. This lower high here, this lower high, there was a liquidity grab in this place. So the market even retested this lower low before they what? They broke it. Look at it. They retested it. This lower low, yes. They tried to sell here. It did not hold. So they now broke it to the upside. So after they broke it to the upside, what happened? They grabbed this lower high as liquidity grab here. So there was a liquidity grab here. There was a liquidity grab in this place. So there was a liquidity grab here. So in this liquidity grab, the market came down and what? And broke structure again. Look at it. There was a break of structure here. Look at it. There was a break of structure. The market did not break structure here. Look at where the market break structure. So this one was not a break of structure. Look at it. There was not a break of structure here. The market did not break any structure that place. So the market did not break any structure in this place. So after they come to this lower low, the market also went back again. So this place, that this candle that take out this lower high as liquidity grab is our area of concept. So here is another place. See? Just
let me see, you're not giving me the phone now.
so guys, as I was saying, you see this place, they take out this liquidity grab here. So we also have a sell here. There is a sell opportunity here. So anytime the market come back here in the future, we also sell here. So we have a sell opportunity here. We have a sell opportunity here. So we have gotten two zones where we are going to sell the market. So after the market break this structure here, there was a break of structure here. So they created liquidity here again. Look at it. There was liquidity that was created. The market was creating a dynamic liquidity here from this zone here. Look at it. You see this high here. They tested one, this one tested two, this one tested 3 times. So they were creating a dynamic liquidity here. So this dynamic liquidity they were creating, it was to this other block here. It was to this other block. So if you are a good trader, you will know that anytime the market is creating liquidity, they are creating it to another block, and it is liquidity that validates another block. If there's no liquidity created to another block will not be validated. It will be useless. So I mean, every other block you see that doesn't have liquidity is useless, because once the market comes there, they will brush it and go their way. So it is liquidity that validates another block. So this dynamic liquidity helps to validate this our other block. So when the market return back here from this place, this other block here, what happened? They sold down and broke this structure. So after they break up this structure, what happened? After they break up this structure, they give us a lower low here and a lower high here. Now, this lower high here was also a liquidity. There was a liquidity here. So after they broke this our lower high, sorry, I'm trying to accept this person. Okay. After they broke this our lower low to the downside, what happened? We expect the market to use this lower low as a retracement, because if you check this leg here, from this lower low here to this place, there is no liquidity that was created. So if the market is going to retrace, we are not expecting the market to retrace to any of this lower high here, because this leg have already exposed the market to us that this lower low is what the market want to use next. Now what happened? You mark to this lower low here. This is a lower low. Look at it, just mark it. Don't you see? The market came and tapped into the lower low, doom, and went down. This is how they have been moving since. Just be checking it. This is how this market has been moving since, because they are not creating liquidity. The market is just selling down. It's just going down. It's just going down. It's just going down. That's what they are doing. Look at it. It came here, tapped this lower low here. This lower low here, tapped it, boom. What happened? And went down, because there's no liquidity in the market. So the market is free to move. So after, what happened? They tapped to this lower low here and went down. And before they tapped this lower low, look at what they did here. Look at what they did here. This is a lower low. Abi? This is a lower low. And look at it. This is a lower high. It was a lower high. Now, don't look at all these things they are doing. This is a lower high. This is a lower low. Now, the market break structure here. There was a break of structure here. Look at it. There was a break of structure here. Sorry, guys. There was a break of structure here. And the market break structure here. Look at it. The market break structure here. It was a BMS here to this lower low. It was a BMS here to this lower low. So this lower low, it was a BMS to this lower low here. Now, from this lower low, what happened? Because there was no liquidity created to this other block here, they will brush it. Look at it. They came to this other block. What happened? They brush it up. They just clear it. People will be willing to say, yeah, the market will not hold. Never. So they just brush it off. After they brush it off, what happened? They came back here as though they want to sell. As though they want to sell. They came back to this other block, to this place. The same thing. Look at it. You see this leg? Always be watching out for this market. You see this leg that broke this structure? There was no liquidity here. There was no liquidity here. So if the market want to move, the market will come back to this lower low here. Exactly. They will come back to this lower low. Look at it. They came back to this other block, the lower low here, tapped it, and come back to this place. Now, what happened? After they came back to this place, they broke structure here. There was a structure break here. The market is just simple. You have to analyze it. So they break a breakdown. As far as they are breaking structure here, what happened? The market has violated structure. We have a liquidity grab in this place. We have a liquidity grab here. We have a liquidity grab here. You see? So all these places now, they are not, we will not call it break of structure. We call it liquidity what? Liquidity grab. They grab liquidity here in this place. They also grab liquidity here in this place. So there is liquidity grab here. In this place too. Grab liquidity here. After they grab liquidity and break structure, what happened? They created what? Static liquidity here. This static liquidity is to give us that anytime they come here, the market will sell. In this static liquidity here, they created here, has already validated this other block here, telling us that if the market come back here in the future, we are going to have a sell. So we have a liquidity here that validate our other block in that place. So we have a liquidity here. So from this liquidity, what happened? This leg now, you see this leg, the market went down and come back here. Now, if you are going to sell this market now, we want the market to come here. The market is going to retrace here. You know why? Because the market will retrace in this zone, but they will break it, but they will retrace. If you are bullish in cashing spike, this is the formula for cashing spike. See this other block, they will retrace here. Because you can see this leg here, this leg, there is no liquidity that is created. So as far there is no liquidity that is created from this leg to this leg here, so before that break of structure, the market will come back here and retrace down. The market must reach there. So if they break here, from here we buy it to this place. That's what they are going to do. So that is it, guys. So we'll expect the market to come here. So we also have a sell. We call it a sell and a buy zone here. We call it a sell stroke buy zone. So the market is going to do 3 things here. They are going to sell, they are going to use this zone and buy. So because our structure in 4 hours here has finished, what do? We move over to 1 hour. We want to see the 1 hour structure now. Now we are coming to 1 hour now. What is 1 hour doing? We can't see structure again in 4 hours. Structure in 4 hours has finished. So we come to 1 hour. So what is 1 hour doing now? So we want to know the structure of this 1 hour. What is it doing? So we come to 1 hour. This is our 1 hour structure. So let us see what the 1 hour is doing. So we begin to track the 1 hour. We want to track this 1 hour now. So we mark here, first of all, this is our lower low here. This is our lower low. This is our lower high. Now this lower high here, this is our lower high. Now from this lower high, the market form a lower low here. Look at it. Now it form a lower low. From this lower low, it give us a lower high. Now from this lower high, they created the liquidity here. Very simple. It always works. They created a liquidity here to validate this our other block. Look at it. Very simple. Every time it's always happening. They created this liquidity here. So look at it, guys. Look at it, guys. It's just simple. Market is just simple. This market is just took time. It's analysis that just many of us are lacking. If you understand this market, just patiently wait for it. Look at it. Look at how they created this equal high here. Now, after the break of this structure here, this is our lower low. They form a lower low here. There was a lower low here. Now, this lower low was taken out here. Look at it. There's a lower low here. It's a lower low here. It's a lower low here. So this lower low, the market did not break structure here. So the market did not break structure. The market formed SMS, which is shift to market structure. So they created this liquidity to this other block. Immediately they came to this other block, they tapped to it and begin to sell that. Where are they coming to? Now, we want to know this lower high here. Remember, this is our lower low. From this lower, they gave us a lower high, a lower low. This is a lower low, this is a lower high. Now, this lower high has been broken. Remember, this lower high that was broken here as a break of structure is a liquidity. It's liquidity. So they just came and tapped to this other block and they are coming down. So where are they coming to now? According to the current structure of this market now, if you come to 30 minutes here, there is a break of structure here to the downside. Yeah, there's a break of structure here. So there's a break of structure to the upside. So this market now, the feature of this market now, we have a liquidity here. Look at it. The liquidity was taken here. We have liquidity here. Now, guys, you see, there's liquidity here. You just have to look for liquidity. There's liquidity. This liquidity that they created here, they are telling us something that they have a vision of coming back to this down. Look at it. They created liquidity in this place and they take it out. After taking out this liquidity, This other block here, the last buy to sell candle here was not mitigated. What happened? They move up. Now, after they move up, what happened? After they move up now, what are they now doing? If you go to like smaller time frame, like 5 minutes, let me check 5 minutes. 5 minutes will tell us what the market is doing now. So just as I said, you see this liquidity they created here. Now look at it. There was also a liquidity grab here in this place. So the market grabbed liquidity here. So this is a liquidity grab because after this break of structure, yeah. So there was also a liquidity grab here. From this liquidity grab, the market went up. Now, what this market want to do now? They want to come down. The market is going to come down from here, straight down like this. They are coming down to this place. If you are going to buy this market, want to buy this market here. Yeah, this is where we are going to buy this market. Because what they want to do is that, look at what they want to do. There was a liquidity grab here. This liquidity grab, they came back and mitigate the other block here. They have already used it. They have used this other block here. It has been